March 2025 was a difficult month for stocks, and April has been very volatile as well for the stock market, partly in response to tariff news. Markets saw some very large intraday swings this month, but a warmer spring may be coming. So, should investors be optimistic? Well, our chief equity strategist and economist, John Blank, is here now to hopefully share some optimism. John, is it time to buy the dip? And if so, will the buy the dip crowd get stocks moving up once again?
Terry, I think so. I mean, we've got 110 S&P 500 members in, and we've got earnings results up 6.1% for the first quarter on 5% higher revenues, which is excellent. Second quarter expectations are for 7.8% returns on 3.9% higher revenues. So that's telling you that there is ongoing progress in profitability at a good clip for revenues for major companies. And we learned today that weekly unemployment claims for the private sector are also still low, and that their durable goods orders today, which is April the 24th, were also quite good. So at the end of the day, this is just another example of a populist media regime peppering us with worry and stories of change. And in fact, the economy is just chugging along with its momentum that it's always had for the last few years.
So, besides the tariff news, what else is contributing to this market volatility, or is it just all about uncertainty?
It's not an uncertainty, Terry. That's what I'm making clear today is that the policy uncertainty is what the market is worried about. The actual aggregate macroeconomy, the 330 million souls that inhabit the United States, are getting ignored more than they should, and the data from them is coming in, reasonable and on its trend.
So, is the stock market in a correction, a bear market, none of the above?
Yeah, we've definitely seen a correction, Terry. The S&P 500 and the NASDAQ are down 14, 15% to the lows. That is definitely a strong correction, but we needed one, and we were, still the S&P 500 using 2025 earnings is still at a 20 times earnings a multiple, which is still, 15% above where it has been historically over 10 years. So we needed this pullback. It was a valuation pullback that was long overdue, and it's correcting to an underlying economy that is, and fundamentals from the companies that are serving it to look pretty good.
So, the fundamentals that you mentioned, is that what the market is pricing in here?
Well, the market's pricing all of these things in at once, and so it's very hard to disentangle what the market is actually pricing in now versus what it's already priced in. I think that's the hardest thing here when you get a down cycle on worry and uncertainty, policy uncertainty particularly. It's very hard to know why markets rise because market can have priced something in that they overpriced something and then get relieved on news. So. It's kind of a wait and see situation for the market as well as the economy.
So, what is there then for investors to be optimistic about in stocks going forward? Is all the bad news priced in?
Yeah, well, I just spoke to the Q1 and Q2 earnings, which is half of 2025, and 6 to 7% annual growth in earnings is not double digit earnings, but it is solid earnings, and it's trend like GDP growth at a high level for an economy that's been cycling upwards for 5 or 6 years. Um, at the end of the day, if we're going to look for this slowdown from this policy chaos, it's going to be in the second half, not the first half.
Near term, then, which sectors or industries should investors be optimistic about, especially in light of tariffs?
Well, I think you got to be optimistic about business services generally, and that's the Visas, Mastercards, Waste Management, Republic Services. These big suppliers of back end consumption. There's a lot of solid companies out there, Terry, that are doing just fine. I think you've got to, like the infotech companies on a pullback here. I think you're getting them to valuations with their growth being stronger that are, pretty attractive. So I do like infotech companies at this level.
Seems like just recently we saw a brief calm in the market. Has tariff turmoil passed its peak? Is the market's next move higher?
Well, that's it, Terry. I think we got the VIX to 55, and that was peak tariff concern. And since that time, in somewhat in a circular manner, as the markets correct down or the administration pulls back on its policies, there is a market driven correction on the tariff policy itself. I mean, it's kind of moving from the markets and the economy and the worry and the corporate American dialogue with this administration that's pushing back and pushing down those tariffs. And so that's another force that's a checks and balances. It's not written into the Constitution. It's certainly happening.
You mentioned the Q1 earnings season currently underway, albeit in the early stages. Too soon for tariffs to impact those corporate results yet?
Yes, it is too soon. Absolutely too soon. They got announced on April the 2nd. These are Q1 earnings, so that is January, February, and March.
Strong buy stocks you are looking at include ASML Holding, HSBC, and Deutsche Telekom.
Yeah, let's talk ASML, ticker ASML. This is the darling chip stock in the Netherlands. It makes advanced technology systems for the semiconductor industry. Got a target price of $750 a share, and with this pullback, you can get it at $650. So this is a nice 10% gain. We've got an A for growth, A for momentum, and the number 2 rank on the short term. 8% growth in earnings this year, 5% next year. This is the story, Terry. I told you about the 6% growth in the Q1 earnings. Now, outperforming that is ASML for the entire year, so you got to like the stock.
HSBC.
HSBC is, of course, the big Hong Kong Shanghai Banking Corporation based in London, but big operations in Asia, of course, and across the world. Here you've got a price target, in the 60s, and we've got 56 for stock. Again, it's pulled back nicely from those highs. And you can also pick up a decent dividend on this stock, Terry. That's a 12% dividend, according to this chart, which is phenomenal. I don't know if that's correct, but if they do, in fact, offer that, that's a phenomenal pick for you from a dividend investor perspective. So, here you got a PE ratio of 8.2, Terry. You got to love a stock like that.
Deutsche Telekom.
Deutsche Telekom. Of course, you don't know this one because this is the major and one of Europe's largest telecom companies, and actually worldwide. And this stock is at a PE ratio of 16. We had a target price of 43, and it's 37 again, a nice pullback. And it's a number 1 ranked stock. So why is that? Because annual estimate revisions for this year are going up 10%. Again, because of the infrastructure packages and the more bullish outlook for Germany. This is a stock you could play that trend.
Our chief equity strategist and economist, John Blank, on stocks and investor optimism with John. I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.